Okay, good morning. Today's new topic is going to be tabular statements, ordinary level tabular statements. And just before I show you the question, this is the layout of the solution. So it's quite similar, almost identical to the higher level tabular statements. So first of all, I'll have a look at a question. And the question we're going to start with or look at is the 2008 ordinary level question. So it says, the following balance sheet shows the financial position of R. Kelly on the 1st of October 2007. So it gives you a balance sheet, but there isn't that many things in this balance sheet. Two fixed assets, three current assets, two short-term liabilities, if you like, and then the capital. Now, one thing to say about this is that there's normally a profit and loss in here as well. But in this year's question, there wasn't one. You had to add it in later on yourself. But apart from that, this is normally the way it looks in the question. It's usually this number of items that are in. Slightly different, I suppose. One thing that might be a bit different is sometimes the expenses due, they might actually name an expense. They might call it wages due or repairs due or something like that, but it's still going to be expenses due. Okay, the next thing to note then about the difference between the higher and ordinary level is that all of this is, if you look first of all up here, it's balance sheet as at the 1st of October 2007. And all of these entries are dates during October 3rd, 7th, 9th. Whereas in the ordinary level, it's normally starting on the 1st of January maybe, and then it's going this might be February, this might be March, this might be July. So it's all the different months of the year. So here it's all just during 1 month. Okay. Same thing you're required to do. Record on a tabular statement the effect of each of these transactions. Okay. So again, if we go back to I've just laid it out here to save some time in the video. Here we have the assets, and it's the 1, 2, 3, 4, 5 items from up here. 1, 2, 3, 4, 5. Okay. And I've left one blank space. Normally you don't need to add anything to the assets in the ordinary level questions. Down here, the liabilities then, creditors 1, 2, 3. 1, 2, 3. But you definitely, in all the questions I've seen so far, there are two things you usually have to add. In this one, there's 3 because they never put in the profit and loss. In the other questions I looked at, they usually did put in the profit and loss. But there are 2 other things then you have to add afterwards. Okay, so all we do is the 1st of it's October instead of the 1st of the 1st. So the 1st of the 10th, 07. Put in each of the amounts. You'll notice there's no depreciation on the fixed assets there or anything like that. The bank is normally money you have in the bank. It's not usually an overdraft, so you don't have to worry about putting it down here. Total them up, we get this. Total these up, we should get the same balance, so just like the higher level. And then we're ready to start off. And notice I just have, these are all October 3rd, 7th, and 9th, and your last column is going to be retotaling all of those items again. So let's get started. I should say as well, just before we get started, it's almost the same things in every question. So do a few of these and you should get them, you should get the hang of them pretty quickly, I would say. So the first thing is received a cheque for 2,300 from a debtor in full settlement of a debt of 2,500. So if you received a cheque, that means you got 2,300. It means your bank account went up by 2,300. Okay. But it said you received it in full settlement of a debt of 2,500, which means that your debtors, you're leaving somebody off the full amount 2,500, which means that you're giving them a discount. If you leave them off 2,500 and they only pay you 2,300, it means you're giving them a discount of 200. And the discount is a discount allowed, which is normally an expense in the profit and loss account. So we need to have down here, this is the first thing you're going to add in, profit and loss. We started, we didn't have any beginning balance for it. So the first thing we're going to add in here is 200, and it's going to be a minus 200 because the discount allowed is an expense in the profit and loss. So it'll go as an expense here, minus 200. And if we total these two, we get minus 200. And both our totals are the same, as they should be all the way through here. Our totals should always be the same. Okay, next one, October 7th, bought goods on credit, 12,800. Now, if we purchase them on credit, that means our stock, first of all, goes up by the purchase price, 12,800. Okay, because we value stock at cost price, and it's what it cost us to purchase it was 12,800. And if we bought them on credit, it means we haven't paid for them yet. So our creditors, or the amount we owe to people, has gone up by 12,800, and that's it. The totals are both going to be plus 12,800. Okay, next one is paid by check expenses that were due at the beginning of the month. Okay, so at the beginning of the month there were these expenses due of 1,900. So if we used a check to pay for these, they are no longer there. We've paid them. They're no longer due, if you like. So those expenses due are done. And like I said, in other questions, it might be that could have been repairs due, and the question might have said paid by check the repairs bill that was due at the start of the month or something like that. So that goes down to get rid of the expenses that you had that were due at the start of the month, and your bank goes down by 1,900 because you wrote out a check to pay for them, and so your totals are both minus 1,900. Okay, moving on to 11th. Paid by check a creditor's account balance of 6,300 and received a discount of 300. So this time it's a discount received. So we paid by check a creditor's account balance of 6,300. So if the account balance was 6,300 and we paid it off with a check, then our creditors goes down by 6,300. Okay, but we received a discount of 300, so what we actually paid by check was just 6,000 because we received a discount. Okay, so that discount received is a gain in the profit and loss ordinarily, so that's a plus 300 going into our profit and loss row here, if you like. So this works out to be minus 6,000. Whoops. And this works out to be this and this together gives you minus 6,000. Okay, the next one then is the 15th. It says sold on credit goods which cost 11,300 for 14,500. So if they cost 11,300 and we just sold them, then our stock goes down by 11,300. Goodbye stock that we just sold. Okay, it says we sold them on credit for 14,500. That means we didn't receive any money for them yet, but it means we're owed 14,500 from our debtors for them. So our debtors goes up by 14,500. And if I total that up, that's a minus and a plus here. It gives me a plus 3,200. Well, the difference between what we paid for them and what we sold them for is the profit, and that goes into the profit and loss account, 3,200. And so if I total this down here, it's just plus 3,200. So both our totals are the same again. October 21st, a debtor who owed 800 was declared bankrupt and paid 20 cents in the euro. Okay, so they owed 800 and they were declared bankrupt. And they paid 20 cents in the euro, which is the same as 20%. So 20% of 800 is 160. So they paid 160. That means our bank account goes up by 160. That's what we received from them. Now they owed 800, but they're gone bankrupt. So I've got to remove that 800 debt from our books because they're gone bankrupt. Now the difference between the two of these, well, when I add them together, this plus and that minus, I get a minus, what is it, 640? Okay. And we know that that's a bad debt. The rest of the 800 that they owed, which they haven't paid, is a bad debt. They're never going to pay it. And a bad debt is an expense in the profit and loss account. So we put it also in as minus 640 in the profit and loss section. And so our two totals rather are minus 640 and minus 640. So they balance nicely there. Next one then is the 25th, paid by check from business bank account 1,700 for repairs to private residence. Okay, so we paid from our business bank account 1,700. So our business bank account is going down by 1,700. Okay, but it was a private debt. We paid for repairs to our private home. It wasn't anything to do with the business. So this is what we call drawings, isn't it? And there wasn't any drawings there in the first place. So we have to add the drawings in. Now the drawings is normally in the finance by section of the balance sheet, and you'll notice that the drawings is the only minus figure that's normally in the finance by section of the balance sheet. The rest of them are all added together, you know, capital and reserves and long-term liabilities. They're all added together to get this total, but the one thing you subtract then is drawings. So it means that if we were putting drawings in here, drawings figures should go in as a minus. And in this case, it also will go in as a minus. Your drawings has gone up by 1700, but since we record them as minuses, we put in a minus 1700 here. And then the two totals are the same, minus 1700, minus 1700. Okay, next one then is, where are we? Yes, the 28th, last one. Purchased an adjoining warehouse for 170,000. A deposit of 10,000 was paid by cheque, and the remainder was borrowed from New Finance Limited. So let's do the first thing first. You got a new warehouse for 170,000. So our buildings, because a warehouse is a building, goes up by 170,000. No bother. Deposit of 10,000 was paid by cheque. You wrote out a cheque for 10,000, so your current account in the bank goes down by 10,000. Now, if I were to add these two together, I would get a plus 160,000 in the assets section. But your liabilities must also go up by 160,000, and that's where we must add a new one in. It was paid by cheque, and the remainder was borrowed from New Finance Limited. So the remainder is 160,000, and it was borrowed from this finance company. So that's a new liability or a new debt you have to put in here. We'll call it New Finance Limited. And it's 160,000 this debt is. And then our totals are, well, I've already totaled that one. This one is going to be a total of 160,000 also. Okay, so one quick recap, and then what I'm going to do is I'm going to pause the video, and then I'm going to total all of these up, and then I'm just going to turn on the video again so you can see the totals. But I'm not going to waste time adding them up while we're on video. So one thing, just a quick recap to say, is that down here, the profit and loss, the drawings, and the New Finance Limited are the three things we added in down here. Normally, I'd say in most of the questions you'll do from now on, the profit and loss will already be there. You'll already have started with a figure here. Okay. In all of the questions I've seen so far anyway, you always had to draw in or add in drawings because the business paid for some private expense or other. And you always had to add in some kind of New Finance Limited or the name of some lending company because you bought maybe equipment or a warehouse or some other building or something like that. Okay, so those are generally speaking always needed to be added in. But what I would say is, besides leaving the two blanks for those two things, I would leave an extra blank in both places just in case. But as I say, I've never seen anything yet that needed to be added in up there. Okay, I'm going to pause and then do the totals. Okay, and that's the totals there. And just to show you where the totals come from, just in case you can't remember, for instance, if I was totaling the stock, this 34,500 figure comes from 33,000 plus 12,800 minus 11,300 gives you the figure over here. And the same for each of them, you're just totaling them across. And even the total of the totals, if you like, comes from adding each of these separate totals all the way across here.